What up, guys? Welcome back. I have a quick one for you today, okay? So just read the disclaimer and let's move on to the trade. We will be talking about Koga today, okay? If you don't know by now, Warren Buffett decided to add Koga into his portfolio, $500 million, okay? If you don't know who Warren Buffett is, he is one of the best all-time investors. So whatever he does, people love to do it with him. And that explains why the stock popped up after hour on Friday, 6%. And it's remained up to that pre-market today and then kind of pop up, and this is where we're going to talk about the trade. Okay, so as always, we want to go look at the one in the daily chart, okay, to see where these resistance, the support, and the possible range of the stock today. Okay, so basically you can see the stock has been trending down, consolidate sideways a bit, make a new high, break out that level, and then trending up. Okay, so at this point right here, the the pre-market, the stock was like consolidated right at this level, $30, right below of this resistance level. So that's one of the reasons why I did not want to get in um, at the opening trade with this stock also. Okay, and if you haven't seen the inverse head and shoulder, this is the inverse head and shoulder. Okay, shoulder one, head, shoulder two. This is one of the very good reversal technical formation. Okay, so that just FYI, okay. And let's talk about the fundamental for the stock. Right, to be honest, this stock is a value stock. It's not even a growth stock. So I'm not sure what his rationality is. I guess because it also pay a dividend, so he want to buy this, get paid, and then for potential growth of the stock. So that's it. So that's the one reason why the fundamental is not that great for me to trade the open for this stock. And after you put in the technical for this intraday chart here, the 3 minute and this 1 minute, okay, as you can see, there is another resistance level here, the high, the aftermarket high. So, and then the stock, this range is like 75 cents for a $30 stock. That's like 2%, so it's a big range. So when it's a big range and then it has too many resistance level, I don't want to trade it at the open. Okay, so basically I would like, okay, I'll keep this on watch, and if it does anything, I'll reassess. Okay, and it did. So it kind of pop up. I guess someone tried to short it here, and you know and it got short squeeze all the way up here and then make a new high. But when it make a new high, it tend to continue. And before you do anything, you want to assess whether or not that high is valid, by volume confirmation. Okay, so at this point right now, this 3 bar right here is around 9 minutes, and it's probably more than 2 million share traded. So it's actually a lot of volume, because this stock average volume is around 7 million a day. So that move up, breakout, is kind of valid. So basically at this point you're like, okay, so if you want to get in this stock, you want probably going to see how the retracement of this stock is and then get in. Okay, so if you zoom in here, you could see this stock, right, move back to the 20-day moving average. Okay, that's one of the support. The VWAP here, and then the downtrend line also as a support. And then if you draw a straight line out here, that also a support. So there are 4 support when the stock move back to that level. Okay, so it's a possible entry level if you want to play the bounce. Okay, because the thing is, there is no resistance up here all the way up to this level. Okay, so let's take a look closer at the 1 minute chart here. Okay, so basically this chart make a new high with a lot of volume, start to be selling off down here up to this 50% level where the 4 support level are at. And as you can see, right, when the selling here, you could see the volume is decreasing, the selling volume is decreasing. Okay, that's what you want to see when the stock make a retracement. And then at this point right here at the support level, this it's a pop in selling volume, but it's actually not selling, it's actually buying. If you look at this candle, it's a wick right here, and then it's consolidated sideways a little bit, and then make a breakout. And then if you draw a trend line, if you see this, you draw a trend, you could draw a trend line right here. Okay, so the minute it pop up above the trend line with a little bit volume, that shows some interest. Okay, and because there is no resistance level here up to the 30-50 point, that's the possible resistance level. Okay, so that's usually people might take some profit right there, partial or whatever they want to do, depend on their strategy. And some people would love to get into this level too, the momentum trader who trade top breakout, they would love to get in here. But the thing is, to me, that's crazy, because you are risking around what, 50 cents to get in here, and how much return can this stock move? The fundamental doesn't add up to this. Okay, so that's the thing. So it's crazy. So if there is a push here, you want to be selling out on this point. So at this point, you're like, okay, where would I enter this stock? Okay, so there's two possible entry here. It's depend on your risk tolerance. Okay, 30-20 is one. You risk about 20 cents. Okay, and then 30-30, the previous breakout entry, and you risk around 30 cents. Okay, so if you calculate the risk rate, if you enter at 320, the first resistance is right here. You make more than 1 for 1. Okay, but if you do the 30-30, you only make less than 1 to 1 if it decides to break back down. Okay, so to me, I think 30-20 is a better choice, because it gives you, you risk less than 1% of a stock, to make 1 for 2, possible 1 for 2, and it did get to 1 for 2. So it's a better choice than $30 level. Okay, so up to you to make the decision. But at that point, when you see this, it make a new high with a lot of volume, retrace to 4 support level, and then bounce off, it's a good trade. Okay, also though, with this, usually you want to trade it, you want to calibrate this with the overall market, the S&P. Usually, the stock, the market kind of gapped down yesterday after like Apple went out and said they couldn't meet the revenue guidance due to the coronavirus, and then the market kind of trending back up, and this is where the trade take place. Okay, it was sideways consolidating, so it wasn't helping or against the stock. But if you see here, when the market trending back down, it moved with the market. Okay, so the stock wasn't that great. So basically, when you trade at this kind of formation, the retracement or consolidation breakout, you want to trade it with the market. Okay, so basically that is everything for this trade. So if you have any question, put it down in a comment. I'll return it to you when I have time. And and you found this informative, drop that like button, subscribe, and share the video. Okay, so that's it, guys. Thank you, and good luck. Bye.